Into the daily doldrums. We're going to be looking at what opportunities we have here going into our afternoon and then into the day. We are going into an environment here where the Fed Fund futures are pricing in a rate hike in 2027 here. We've pushed another meeting out. But we have some incredibly important news events here as we're going into the week. The first one is this evening. The Bank of Japan is going to be raising interest rates. That's the expectation. They've given forward guidance to doing so. And this will be the highest rate for the Bank of Japan in 31 years. 31 years. Okay? The carry trade has the danger of unwinding when those rates rise because the carry trade is under pressure in that environment. Now, the question as we move forward here into the week is that one, the Bank of Japan, are they tight? Are they hawkish? And we're presuming that they are going to be. That's the forward guidance that we have been given. And then as we go into our Wednesday time frame, we have a Fed funds rate and the FOMC economic projections. We have Warsh's very first Fed meeting. And the perception is that the other Fed members, and we have had 8 of those Fed members speaking before the blackout period, would potentially leave the year, at the end of the year, open to potentially raising interest rates. And so we had the biggest 1 month change from the perspective of even just polled economists coming out of Reuters last week. Prior to last month, 50% or 50% had potentially were pricing in a rate cut still by the end of the year. And that 30 days later, 70% opened the door to rate hikes. So those professional forecasters were listening to the Fed's forward guidance and those Fed speakers and starting to attempt to price in rate hikes going into the end of the year. And so that's incredibly important here. We also have an environment where we have SpaceX launching. They lost $5 billion last year. They've lost over $10 billion in the last several years. And yet we have retail who is essentially chasing SpaceX at all-time highs and at 90 times earnings. It's incredible because when we go into the end of this year, giving that context here, we are inside of an environment where this is the year where we have a tendency of seeing dollar strength trades develop. And you can see this going into 08, add 3 years. Again, going into the end of 2011, add 3 years. Going into the end of 2013, add 3 years. Going into the end of 2017, going into the end of 2021. And then that's where we were going into the end of last year, the 2025. We have made lows. We had a dip into lows. This has been an environment here where those weekly support levels have defended after a double bottom type situation. We have made pullbacks here at 38.2% lines 2 weeks ago and lifted off away from those support levels. And we do have the potential of another pullback here from our lows coming out of May 6th lows to highs as we're moving forward here into this week. But first, there's a dollar weakness trade that's going on. So last week, we had a dip into this high, and then we broke the smaller series of long setups on the dollar. And this is what started sending the dollar back down into its support levels. It's sending it back down into its support levels. So what helped contribute to this rally that we see in the indices is this dollar weakness trade that we were setting up inside of going into Friday. Now, we completed those. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.